Hello everyone, this is the 15th of April 2023. Now in this video I attempt to clarify a huge misunderstanding concerning the capital gains tax in New Zealand. Left-wing commentators and politicians often raise this idea. However, I am convinced that they are not entirely aware of what they are talking about. Now, what is this huge misunderstanding? Owing to former reverse mortgage opportunities in New Zealand, property owners could practically take on new loans and purchase new properties practically without any initial capital in it. If you owned two properties and one of them was mortgage free, you could get a mortgage which combined your old property value and the new property value together. Therefore, practically without capital investment, these investors could get new residential properties, and if they rented them out, the rent could cover their debt obligations. Now, with time, they could achieve new and even further properties practically without any kind of work. Understandably, the left-wing commentators and politicians feel a grievance because this kind of lending scheme contributed to severe wealth inequities in New Zealand. However, when I attempted to ask them how they think the capital gains tax should work, they never came back to me. For example, Bernard Hickey, I found his email address. I sent him an email about this kind of clarification, but he never came back to me. I raised this issue on other social media platforms as well, but nobody provided me with a clarified answer. However, the tragic situation is, as I said in my former video, taxes should be imposed when payments are happening, payments are occurring. This means capital gains tax should be imposed when the properties or the assets are traded. Now, this kind of tax actually exists in New Zealand in the form of the bright line test. If someone owns a residential house and they sell it within 10 years after the purchase, they should pay income tax if they sell their property at a higher price than what they purchased. It's fair, it's okay, it's there. Well, after 10 years, maybe it could be extended after 10 years. Yeah, that's a question of taste. I wouldn't oppose it because that is still fair. However, it is not possible to impose that tax when somebody still holds the property. If we suppose that the property price increased, imposing a tax on a supposedly realized income, now, okay, that's just fictitious income. So people would pay fictitious tax. I would be happy with that. Now, countering this request from left-wing politicians and commentators is asking them what we would do if the property prices were declining, as it's been happening in the last year. Should we provide tax credits for these investors? I think that would be quite a big outrage about that. But actually that would be fair. If we impose tax on the increase, we should provide tax credit for the decrease. But coming back to the capital gains taxes, capital gains tax does exist in New Zealand, but it is not uniform, which means there are assets which are not exempt but can be exempt if somebody holds them for a longer period of time. Lands, residential houses, if the owner holds them for longer than 10 years, they are tax exempt. Yeah, that's not good. But otherwise we pay taxes when we earn interest on bank deposits. We pay taxes when we sell corporate shares, if we sell them with profits, of course. And we also pay taxes when we are trading cryptocurrencies. So actually, capital gains tax does exist here in New Zealand. And to be fair, everyone who raises the idea again should raise that, yeah, we should harmonize it. But talking about it as a magic weapon to oppose inequalities and somehow correct them is just irresponsible. It's leading nowhere. That's my strong opinion on it. I am willing to discuss it any further. Anyway, hope this helps for you, and see you in the next one. Thanks for watching.